Welcome to Trading Lounge and the Australian report for the 16th of March, starting with the ASX here. We're still looking for a move to the upside here, and as mentioned yesterday, the safe trade would be having the 6,800 as the support rather than the resistance here. There's been a lot of upside pressure on that 6,800, and we're just starting to tackle that again, but we don't have support there. We do have long trades in the market, so we can look at that. We're also seeing BHP and iron ore and copper and Australian dollar and those guys correcting. So we'll look at those today, and they can all be brought into the same fold. So copper, Australian dollar, BHP, FMG, that sort of stuff. They can all be brought into the same pattern, which for here, we still need to see one more move to the upside like we're seeing in the US markets and European markets. We haven't broken to the upside here just yet, but we should do. We may not reach the 7,200 at that stage, but all we really need to see is a high above this one here. So it's always a battle between the finance and the resources, and we'll also look at CommBank as well, because it's in a bearish pattern at the moment as well. Now, because you can see how messy this is here, I've got two counts for it. The first one is on this one here, where it can play out a little bit further to the downside here in terms of an A and a B and a C and a D and an E wave here. I don't think it's the case. I think we should sort of push up from here, but at the same time, I'm not seeing really nice impulse waves here. We really need to push through this today. The resources can help on that note, actually, and the Australian dollar as well. So if they're going to push up today, we'll be looking at it like this here. Now, we've had this spike here. I think it's just a data breach there. So, but yeah, wave 3 over here with an A and a B and a C and a D and an E here. That could be counted differently as well. But as long as the market stays above the 6,700, then that's fine. So let's just go into the tick chart and have a closer look at this pattern here. So yeah, I just think that's a bit of a data thing with this particular platform. So we've been looking at it as, well, I could count an impulse wave up here and then an ABC pattern here. And then even though this is all a little bit jagged, the main point here is that we are seeing impulse waves to the upside here. So we can run with that. I'm not quite sure how to count that just yet. But what we mentioned yesterday as well was really gaining that support on top of the 6,800. And it's getting there. It's just not sort of sitting there just yet for that. In terms of, well, if we look at the Australian dollar for a moment here, we've noticed this A, B, and C pattern to the downside here. This little pattern in here appears to be corrective. You could probably go long on that. Let me just get that in here. I mean, technically taking out that top there would make that an A wave, a B wave, and a C wave down here. Yeah, okay, so but you could possibly get, if you're going to get closer here, then you would need to put the stop under, well, just under there should do the trick on that. But maybe even just half a position if you're going to go that close to the market at that point. So I'll just make that a bit of a thinner line there, and then looking to add on top of here. Because we've got 3 waves here, it could expand out further and have all this as the A wave here, a B wave up here, and a C wave down here. We don't have an impulse wave here yet. We've got this move here. This one counts down as 1, 2, 3, 4, 5 here, and then 1 and 2 and 3 here, or 1 and 2 and 1 and 2 here, building to the upside here. So it can just go straight up from this point, or we could see a larger correction here as a flat, as an A wave, a B wave, and a C wave coming into play here. This is the same as copper though. So if we look at Where are we? Copper. So we know that the move here is corrective. If we look at that on, say, a 4-hour chart, the same as the Australian dollar, you'll get the idea there that same pattern as the A wave, the B wave, and the C wave here. So we're looking at this. This is impulsive with 1, 2, 3, 4, 5 here. So it may come back and check this here, but the important thing here is to note is that this move here is 5 waves, this one's 5. So it is corrective. It could get a bit larger, but I certainly want to push higher from this point. So all good, bullish basically, just a bullish pattern, you know. And then for iron ore as well, as noted before, we've been looking at this as a 3-wave move, so it's corrective. So it means we need to take this top out here. We just had to work through this here, and it does appear now we've got an A wave, a B wave here, and then a C wave here, 1 and 2 and 3 and 4 and 5. So we'll look for that low yesterday. So that can be in place now. We do need a bit more evidence. So a nice support on the 1,000 here. But this is a point where we can see, you know, a very strong move come into play here now for this as wave 3. So that's what we're kind of looking for there in that regard. So we'll just see how that plays out. We need to gather evidence, and getting support on the 1,000 here would be good. But getting a nice tested support or a classic trading levels pattern on 1,000 here would put those iron ore companies into perspective as well. So we've been looking at FMG here. So this is just the weekly chart here. So from wave 3 up here, we've been looking for an A and a B and a C. It's not quite maybe finished just yet, but we'll just wait for a little bit more evidence on iron ore first. But it can just drop below the level here. It'd be nice if it does drop below the level and then get back up here on support. That would be just a nice positive step, and securing that major trading level 20 here as the thing. But basically a classic trading levels pattern here, the arrival, the reaction, the first high above the level, then the ABC pattern. It doesn't have to drop below, you know. Normally we look at it like this, dropping below the level here, coming back below the level, but the variation on that is this one here where it doesn't drop below the level. So FMG could be like that. I don't know yet. Let's just see how that goes in that regard. And as we mentioned yesterday, BHP, this is the ADR here for BHP, the US BHP. So the bigger pattern here for this is like this here. So wave 3 here, an A and a B and a C, with wave 1 and 2 here. And as you know, all the banks and Goldman's and all that are talking about a super cycle. So they've clued into it over here, but really it started over here. So we've got 1 and 2 and 3 and 4 also pulling back for that 4th were there. So if you're in BHP internationally or locally, this is more of a buying opportunity, this pullback, because this is just not finished to the upside. So yeah, our local BHP. So we can look at this as wave 3 here as well. And pulling back it. So it can pull back lower here. So I'm just sort of, we can look at this as an A wave, a B wave, and a C wave here. There may be more downside to come here. As I mentioned, I've got a position in this, and I'll be looking to add to it once I can kind of figure out. I'll add to it either down here or I'll add to it on top of the 50 here. One way or the other. It doesn't really bother me because of the longer term trend in this here. So yeah, it's possible that the resources can push up from here. That's basically the way I'm sort of saying it, but also saying too that you know, this pattern is the same for copper, much the same for iron ore, the Australian dollar, and you know, the ASX has also been correcting as well. And if this is ready to go, then that could be ready to go as well. Of course, the ASX is sort of weighted towards the banks more. So looking for I think we've just about sort of done that, really, haven't we? I lost the plot there. So yeah, anyway, that's sort of where we are with all of this, I guess. Oh, the banks, that's what I wanted to do. Just, yeah, sorry about that. Mainly CBA here. So with CBA, I can count it up as the top here as wave 3 or wave C and having a top in here. Now, if it's wave 3, then we can look at this as 5 waves down here as wave A, back for wave B and 3 waves, and 5 waves down here for wave C of 4. If it's wave C up here as a top, then the move down here would be an impulse wave, which would be wave 1 here, and then going back for wave 2. Rather high for wave 2, so probably a wave 4 here. So an A and a B and a C wave here. So if we can just look at that on the tick chart for a moment. So a bit of a messy chart, but from the top down for 1, 2, 3, 4, 5, and then the A wave, the B wave, and the C wave here for wave B. And then we were looking yesterday, we were looking down at 1, 2, 3, 4, 5 for 1 and 2 here. Wave 3 is a little bit dodgy, but I'll call that in there. We looked at wave 4 here as an A and a B and a C, so that played out with a new low coming in. Not a fantastic new low. And it could also play out here. We've got wave 3 here as an A wave, sorry, wave 3, 4 and 5 here, then an A and a B and a C wave up here for that, for wave 2. And then down from that point. Now, this move down through here hasn't really given me a nice 5-wave structure here. So it looks more like a 3-wave structure. So it got me sort of thinking and like, well, would we have wave 4 here and then have this as an A wave, a B wave and a C wave here and then come down here? But even if we came... Oh, excuse me. Even if we do come down here, we're still going to get an ABC back up here. Okay, so we can go short through that, or we can go short through this one here. So not quite ready yet, but we'll be ready tomorrow for that. Okay, if that is the case, from wave B here, we'll look at that as wave 1 and 2 here. And then we will look down for wave 3. Wave 3, 4 and 5 coming back down towards the low here for that correction. Anyway, that's the way we're looking at that for the moment. So, yeah, probably this is wave 1 here with an A wave, a B wave and a C wave up here and then down from that point. But just didn't count nicely down here for a 5-wave structure here. So we just got to be a little bit careful. Not going to throw us out too much. I'll just check on A and Z as well. I haven't looked at that. Yeah, I was looking for another low to come down here. We still didn't really get that, did we? I mean, because I've been counting it up here from wave 4 as 1 and 2 and 3 and 4 and 5 here, the top there. And so looking for 5 waves down here so far. You can see we've got wave 1 here and 2 here. And yeah, I can count that in different ways. But yeah, that hasn't given us that low there either for this. I mean, it could be corrective coming down here in this particular case because ANZ has been doing, been doing its own thing, Actually, the other thing I just want to have a look at is China again as well. I just want to have a look at it on this is the monthly chart for China. This is the A50 here. And the main takeaway here is that I just want to point out that this market's still quite bullish from here in terms of 1 and 2 here and 1 and 2 here and 1 and 2 here and then the third wave up here pulling back for the fourth wave. So it's pulling back and so our resources pulling back. And then we'll see wave 5 up here for 3 and 4 and 5 and continue to move on that way. So yeah, I mean, can we look at Australia and China as the same markets or, a shadow of that? But either way, just letting you know, China's still bullish there. And as we know, the US banks are doing business there. Normally in China, operate in China, the Chinese own 51% of the company, but Goldman Sachs and JP Morgan and those guys now don't need to do that. So there's a bit more liquidity and freedom there for those banks. Obviously China wants liquidity, who doesn't? Alrighty, thanks for tuning in. Cheers.